Hello everyone, a very good afternoon. Welcome to the RBWM One Shot MCQ series. And here we'll be discussing MCQs from all our modules. Today we'll be discussing Module A. This is for your exam cycle JAIIB May 2025. So all the important MCQs, all the important topics we'll be covering today. Before we start the session, make sure that you like the video, you share the video, and you subscribe to the channel so that you do not miss any of these sessions. These are very important. Your exams are very close now, so make sure that you do not miss any of these videos. All right. So let us start. I will be showing you some questions. You'll have some questions on the screen. Then I'll give you 10 to 15 seconds to comment down your answers, and then we will discuss the correct answers. You'll also get the PDF of this video that you can download after the session is complete. So let us start. First question from Module A. Retail banking evolves from mass retail banking to class retail banking. What distinguishes these stages? This is a multiple statement type questions. You have these four statements. First, read the statements carefully. Then from the given options, select the correct answer. So, which of the following statements are correct about the stages in retail banking? The mass retail banking focuses on standardized products for a broad customer base. Class retail banking is exclusively digital banking. Mass retail banking primarily serves the high net worth individuals. Or option statement fourth is the class retail banking offers customized services to the unique customer segments. Another question that you need to answer, which of these stages is known as the private banking? Private banking. Do we call mass retail banking or class retail banking as private banking? This also you need to answer. First, tell me the correct answer. Option A is 1, 2, and 3. Option B is 3 and 4. Option C, 1 and 4. Or option D, 2, 3, and 4. What is the correct answer to this question? So let us discuss a few points. Retail banking refers to offering the banking products and services to the common customer segment, to the large customer segment, as opposed to corporate banking or wholesale banking, right? To individual clients. We are offering banking services to the individual clients. Now, these individual clients can be from the mass or common population, or they can be the high net worth individuals who have a higher level of income. So the first stage of retail banking is known as the mass retail banking, which focuses on standardized products, creating a broad customer base. So offering products to all the customers in the retail banking space, and these products have the same qualities. Class retail banking, on the other hand, offers customized services to the unique customer segment. This is the high net worth individual segment. Option statement second, which says that class resale banking is exclusively digital banking. This is incorrect. Even offline banking through the branches is there in class retail banking. And mass retail banking primarily serves the high net worth individuals. So, no, these are served by the class retail banking. So, the correct answer will be option C, that is 1 and 4. 1 and 4. All right, I hope this is clear. Another question I asked, which type of banking is termed as private banking? Class retail or mass retail banking? Which stage is termed as private banking? So the class retail banking is also known as private banking. Customized, tailor-made solutions. These customers are then they provide a source for the banks to cross sell and upsell fee based products as well, right? So these are the definitions. Next, how does retail banking differ in its approach to customer service compared to corporate banking? The difference between retail banking and corporate banking is also very important. The type of products that are offered in retail banking, the if we're talking about the asset side product, so the loans and advances, what is the quantum of loans and advances, low ticket size or high ticket size, then the risk that is involved, the pressure of NPAs. Here the differences are very important. So this question asks you the difference in approach to the customer service. Option A, retail banking exclusively uses digital channels for customer interaction. Option B, retail banking targets individual consumers and small organizations unlike corporate banking. Retail banking does not offer services like mortgages or personal loans. It focuses on smaller number of clients with high value transactions. Which of the following options is correct in describing the difference between retail banking and corporate banking? That you need to answer. 10 seconds to answer this question. All right, so the correct answer to this question is option B. It targets the individual consumers and small organizations. Corporate banking targets the large corporate segment, the business classes. The ticket size is also large, and the deposits, they also involve high value transactions. But on the individual or the retail segment, the ticket size of loans is less, plus the deposits, they are used for mostly the regular payments. It does not exclusively use digital channels. Branch mode, offline mode is also used. Remote channels is also used. Retail banking does offer services like mortgage and personal loans, and it does not focus on the small number of clients rather than the mass segment. There is the classification of customer segment in mass retail banking or in retail banking as a whole. We have the mass market, then we have the super affluent, affluent, high net worth individuals. This is how the segmentation is done. Based on the segmentation, customized products, tailor made services can be offered. Next question. This is very important. The SBU approach, departmental approach, and the integrated approach. This is the approach of that the banks adopt towards their banking business. So what characterizes the SBU approach in banking? The SBUs operate without any autonomy in decision making. The SBUs are profit centers focusing on specific product offerings and market segments. Each SBU lacks control over factors affecting in long-term performance, and SBU functions as autonomous divisions. So quickly recall what all we have studied about the SBU approach, strategic business unit. This is a separate, we will say, unit under the main or the whole business, under the big business, and it focuses on specific target. There are specific targets or profits. The product is also specific. It has its own management, the team, decision makers, everything is separate. So the SBU will be small enough that it has the autonomy. It will be big enough so that it can control all its processes. First statement says that the SBU operate without any autonomy, so this is incorrect. A good level of autonomy in decision making is given to the strategic business unit. The SBUs are profit centers. Yes, they focus on the specific product offerings and market segment exactly, and they function as the autonomous divisions. So the correct answer will be option D, that is 2 and 4 only. So the difference between SBU and departmental approach should be very clear. Already we have had these discussions. All the topics, all the chapters of the complete RBWM syllabus are there on the YouTube channel. Make sure that you go through them thoroughly. Very important topic. Definitely you will find questions from this topic in your May 2025 exam cycle in your RBWM paper. All right, let's move on to the next question. How do public sector banks in India typically implement their retail banking model? First, let us differentiate. We have seen how the SBU works. Now, how does the departmental approach work? In the departmental approach, instead of dividing or instead of creating the SBUs that are profit centers, we divide the organization based on the function. Function. Function that each department performs. There will be a separate department for accounting, separate department for marketing, management department will be different, finance department will be different. So we are not creating separate units for product offering. The same organization, the same unit will offer all the products. All the products, just the departments will be different. All right. And SBU approach, we create separate profit units. So if we are following the SBU approach, the same bank will have separate units. One will be focused on, let's say, the retail banking. Other will be focused on corporate banking. Another branch in the metro location. Another branch just rural banking. All right. And departmental approach, all of these under the same unit with different departments. Different departments mean now one department will focus on retail banking, another will focus on wholesale banking, and so on. So, how do public sector banks typically implement their retail banking model in India? Option A, through a general departmental approach. Option B, by adopting a focused SBU model. Option C, without integrating retail banking into their overall business plan. And option D, by taking retail banking as an independent entity. Which approach is adopted by the public sector banks in India? So I hope the definitions of both the approaches have made it clear that the public sector banks adopt a general departmental approach. The general departmental approach. Private sector banks, old generation also go with the departmental approach. The new generation could go with the SBU. Foreign sector banks, they go with the SBU approach. Or rather, with whatever their profit motive is. There's no clear positioning there. Alright, so option A is correct. Next, what is the key feature of the departmental approach in retail banking? Again, like I said, this topic is very important. You need to understand the main features and characteristics of each of the approach, SBU, departmental, and the integrated. Before we move forward, I would request you to kindly like the button and share it with others as well so that I can bring more such important sessions for you. Please like the video and share the video. Alright, now let us answer this question. What is the key feature of the departmental approach? Option A, there's a lack of specialized functional divisions within the organization. Division is based on the strategic business lines. Segregation of the organizational functions into specific departments. Option D, absence of a manager and chain of command in each department. Answer this question. I will give you 20 seconds. What are the features of the departmental approach? So, as we have already seen, the departmental approach involves organizing an organization or dividing it into distinct departments, and each will focus on specific functions or activities. Right? So each department focuses on their specific area of expertise. The employees are allowed to develop specialized skills and knowledge. Better authority and responsibility is delegated. And so here the correct answer accordingly will be option C, that is segregation of the organizational function. So the segregation is not based on profit motive, or the segregation is not done on the basis of profit centers, rather on the basis of organizational functions. I hope this is clear, right? Okay, let us move on. Next question. How is the integrated approach typically adopted by the bank? So we have now covered all the approaches: SBU, departmental, as well as the integrated approach. So your revision of the complete topic is done here. Now you need to answer, how is the integrated approach typically adopted by the banks, or which type of banks adopt the integrated approach? Mostly by the larger multinational banks, exclusively by the public sector banks, rarely used in the banking industry, or it is primarily used by the smaller businesses. Yes, answer this question now. All right. So the integrated approach, rather than working on either SBU or department, they use a balance mix. A balance mix, right? So what is done here? The smaller organization, they have the best features of both SBU approach as well as the departmental approach. So the correct answer is, it is primarily used by the smaller businesses, right? So SBO approach mostly by the new generation private banks and the foreign banks, departmental approach by the private public sector banks, and integrated approach by the smaller businesses. And the revision is complete. Next, what characterizes the approach of the new generation private banks to retail banking? When the new generation private banks, they are entering in the retail banking segment, what is their approach? Do they have a clear vision for positioning? Do they have a clear positioning platform? Do they aspire to be top players across all the classes of banks? They have conservative customer and business initiatives, or they go by aggressive positioning and technology strategies. What is the approach adopted by the new generation private sector banks? So basically, first we need to understand what is the meaning of positioning or the objective of positioning. We are focusing on a particular customer segment. So to get the customers, to perceive our brand as something different and better, and the product as the leader in the market, to differentiate our products. We can establish a unique value proposition, identify the competitive advantages. We will define our target audience, right? So, this is a clear positioning platform. And when we are talking about the new generation private sector banks, so they aspire to be a top player across all classes. And for this, what they do, they use aggressive positioning and technology. So the correct answer is yes, option B. They do have a clear vision for positioning. They go with positioning targets. Thus, they follow the SBU approach more. So the correct answer is option B. Moving on. How do the retail banking models of new generation private banks differ from the old generation private banks? How are the models adopted by the new generation and the old generation private banks different? The new generation private bank avoid technology based strategies. Old generation banks focus on aggressive market positioning. New generation banks aim for top slots with aggressive strategies. And statement 4, old generation bank aligns their models with their conservative business plans. I think this question is very simple. You can easily answer which statements are correct. Comment your answers. So, do the new generation bank avoid technology? No. Do the old generation bank focus on aggressive marketing position? This is approach which is more followed by the new generation banks. The new generation bank aim for top slot with aggressive strategies, yes. And the old generation bank align their models with conservative business plans. So the correct answer is option D. Absolutely. Option D, 3 and 4. I hope there is no doubt here. This is clear how the old and the new generation banks they approach their retail banking models. Then another very important topic. What determines the choice between the horizontally and the vertically organized model in retail banking? According to the Boston Study Group, we have four models: the horizontally organized, predominantly horizontal, vertically organized, and the predominantly vertical. All right. So, how do we determine that whether the retail banking model is on the horizontal side or on the vertical side? The level of customer information available on a single platform, the bank's preference for traditional banking methods, the geographical location of the bank, the range of products and services offered across assets and liabilities. Now answer this question. How do we differentiate between the horizontal and the vertical models? Option D, 1, 3, and 4. Do we take the geographical location of the bank into consideration while deciding the horizontal or vertical? This is more related to the segmentation, the segmented approach. We have the four models, right? Let us discuss this again. Horizontal and vertical on the extremes, and in between we have the predominantly horizontal and predominantly vertical. It depends on whether we are using end to end processing for each of the product, or we are using a common customer database which will be shared across all the products. This is how we determine whether we are going for horizontal or vertical, right? So the correct answer here will be option A, 1 and 4. The level of customer information available on a single platform and the range of products and services offered. Banks, if they're preferring the traditional banking method or the geographical location, this will not be considered. All right. So if we have end-to-end processing for all the products, then it is the horizontal model. If we have end-to-end processing for most of the products and some customer information integration is there, then it is predominantly horizontal. If a common customer database is available on a single platform that can be used for all the products, then it is vertical. And for most of the products, common information. For some products, end-to-end processing, then it is predominantly vertical. This topic is very important again, so make sure that you revise it thoroughly. Next question. Which type of banks typically follow the vertically organized model? Now we have discussed how the horizontal and the vertical model works. You need to tell me which banks they adopt the vertical organized model. Public sector banks, private sector banks, old private sector banks in certain regions, and foreign banks. Yes. What will be the correct answer now? All right. So, end to end processing, separate process model is adopted by the public sector banks because they mostly follow the traditional approach towards the customers. But the private sector banks or the foreign banks, they usually go with the vertical model. So the correct answer here will be option B, that is 2 and 4. New private sector banks and foreign banks, they use the vertically organized model. Public sector banks, they go with either horizontal or predominantly horizontal. And even the old private sector banks, they go with the horizontal model. All right. So option B is correct. No, D, 1, 3, and 4. Public sector banks, they go with the horizontal model. You can keep a clear concept in your mind that the models which seem to be more traditional, anything that seems to be more traditional or in some manner outdated, that is followed by the public sector banks, which is more technologically oriented, new technology is used, that is adopted by the private sector banks. So having a common customer database that is used across the products will require a lot of technology, data mining, cloud computing, right? So private sector banks, they go with the vertically organized model. So the correct answer is option B. Then, how do the foreign banks typically approach retail asset processing? We are still on the topic of vertical and horizontal model. We have seen how the public sector banks, they go for horizontal, and the now we are talking about the retail processing. Retail processing means when the loan, it is the type of product, it is marketed, customers are brought on board, the customers are onboarded, their application is accepted by the bank. Application, loan application, the basic documentation, sanction of the loan, disbursement of the loan, follow up and monitoring. These are the various steps in the retail asset processing. Two methods are there for the retail asset processing. One is the stand-alone model. Second is the centralized model. In the stand-alone model, at the branch level, all of these steps in the retail asset processing are performed. But in the centralized model, what is there? A retail hub or retail factory is created, which is in the central, and all the branches are attached to it. So the branches, they will get the application and forward it to the central hub. Rest of these steps will be done here. So you are saying C, right? So we are asking about the foreign banks. They avoid centralized processing model. They follow a standalone branch level processing model, mix of centralized and regional processing hubs. Centralized processing is the norm. Here we need to think, why would a bank require a centralized model? If they do not have a good branch reach, the branch reach is limited to certain locations, or standalone model where the branches are efficient enough to carry on the whole retail asset processing. Foreign banks, they do not have a branch reach, so they will go with the centralized processing norm. They will go with the centralized processing norm. Their branches are not equipped with the enough employees, staff, and manpower. So they will just accept the application at the branches and forward it to the retail hub. The retail hub will then do the rest of the processing. Are you understanding the concept now? How the centralized model and how the standalone model works. In the standalone model, all the things, all the steps will be done at the branch level itself. So the public sector banks, they follow the standalone model because the branch is efficient enough. They can perform all the steps on their own. But the private sector banks and the foreign sector banks, they do not have a good reachability. So private sector banks will go with a mix because some banks, they do have a good reach, but the foreign sector banks, they will go with the centralized processing. All right. So the correct answer is option D. Next question. How do public sector banks typically approach their technology implementation? Now, technology implementation models again are two. Either we can use the in-house sourcing of technology, or we can go with outsourcing. Outsourcing means hiring third-party agency or technology providers for our products and services. In-house means developing the product on our own technology, owning the technology. So, how do the public sector bank approach their technology implementation? They primarily do so through outsourcing all the technology needs. They use in-house models with partial outsourcing. Avoid the use of modern technology. This is absolutely wrong. Relying solely on traditional banking methods without technology integration. This is also wrong. So, absolutely, the correct answer will be option B. The public sector banks, they use the in-house models with partial outsourcing. For some products, they can use partial outsourcing for, let's say, ATM network or for the mobile banking or internet banking. But for most of the products, the technology implementation is in-house. And who goes with outsourcing and for the technology needs? This is adopted by the private sector banks or the foreign banks. All right. Yes, the correct answer is option B. Great. Next question. Which of the following statements correctly describe profitability? Again, we have only 4 units in module A, but out of these 4 units, the second unit and the fourth unit is very important. Second unit, in which we are studying the different process models, the SBU, integrated and departmental, and the fourth chapter, where we have the difference between profit, profitability, the three levels of profit, net gross operating, and the traditional measures of profitability, ROA and ROE. Very, very important topics. Definitely you will see questions there. So answer this question now. How do we correctly define or describe profitability? Profitability is solely determined by the amount of profit that a company makes. It is a measure of how efficiently a company uses its resources to generate profit relative to its expenses. Profitability compares a company's profit with its overall revenue and costs. A company with higher absolute profit is always more profitable. So you are saying C, 2 and 3, and yes, you are correct. 2 and 3 is the correct answer. So let us see some basic points. Profit is the direct measure. Total revenue minus total expenditure will give us the profit. Profitability, on the other hand, is a comparative method, profitable or not, whether an organization is profitable or not. Profit is a quantitative measure, and profitability is a qualitative measure or a relative measure. A relative measure. Profit again is showing what profit we are generating in the numbers. Profitability shows how efficiently our organization is working, how efficiently we are managing our resources. With less resources, can we generate more profits? Or to generate more profit, we are incurring more cost. Also, a company with higher absolute profit makes always mean it is more profitable is not correct. A company might be generating profits, but on the expense of more costs. All right. So profit is quantitative, profitability is qualitative, profit is absolute, profitability is relative. All right. Next question. How is gross profit calculated and what does it indicate? So, like I told you, there are three levels of profit. We have the gross profit, we have the operating profit, and net profit. Which of the following statements are correct about gross profit? It is calculated as total sales minus the after deducting all the operating expenses, or it is the first level of profitability measurement on an income statement. Answer this question. You have 15 seconds to answer this question. Option D. So let us see the correct answer. Yes, it is 1, 2, and 4. Gross profit is the first level of profitability and it is shown as the first point. We have sales at the first point of the income statement. From sales, we deduct the cost of goods sold. This will give us the gross profit. That is total sales minus cost of goods sold. Right. Then the second level of profit will be operating profit, which is gross profit minus all the operating expenses. That is why the third statement is not correct. What are the operating expenses? These can be the selling, general, and administrative costs. And finally, we have the net profit. Also, can you tell me the formula for gross profit margin? How do we calculate the gross profit margin? Yes, how do we calculate the gross profit margin? we don't divide it by cost, but what we do, we divide the gross profit by the total sales, not the cost, but the total sales. So if our gross profit margin is, let's say, our gross profit is 20,000 and the sales is 1,000. All right. So we divide it by the total sales. Similar for the operating profit and the net profit. All right. Now, which of the following statements correctly describe the relationship between gross profit, operating profit, and net profit? What is the difference between the relationship, or how do we define the relationship between these three levels of profit? Gross profit is always higher than operating and net profit. Net profit is typically higher than the gross profit. Operating profit is calculated after deducting the expenses from the gross profit, and the net profit is residual profit after all the types of expenses, including operating expenses, taxes, and interest. Which of the following statements are correct? 1, 2, and 3, 2 and 4, 2 and 3, or 1, 3, and 4? Option D, D, A. The correct answer is option D, 1, 3, and 4. Option third, the which option is not correct? We have the second. Why will net profit be higher? From the gross, for the gross profit, we are subtracting from the sales the cost of goods sold. These are the first and the second items in our income statement, right? So this will give us the gross profit. From the gross profit, I am deducting the operating expenses, the selling, advertisement expenses on these. This will give me the operating profit. And finally, from the operating profit, I am also deducting the expenses on interest and taxes. So the net profit will definitely be less than all the other two. Operating profit will be less than the gross profit, and gross profit will be higher than the other two. All right, so the correct answer is 1, 3, and 4. All the types of expenses are removed, then we arrive at the net profit. This is the relationship between the three types of profits. Clear? Option D is correct. All right. Next question. What differentiates profit from profitability in business context? Again, we have already discussed the difference between profit and profitability, so you can easily answer this question. First statement, profit is a relative measure, while profitability is an absolute measure. Profit is calculated as total revenue minus total expenses. Profitability is a measure of efficiency in relation to the size of the business. Profitability compares a company's profits to its resources and investment. I think you can easily answer this question. Which of the following statements are correct? 1, 2, and 3, 2 and 4, 1 and 3, or 2, 3, and 4? Comment down your answers. All right. D. Others also please answer. All of these points we have already discussed. Profit is the absolute measure and profitability is the relative measure, which talks about the efficiency. So this statement is incorrect and rest all are correct. Profit is equal to total revenue minus total expenditure. Profitability tells us the efficiency, how much cost we are incurring, and because of those costs, are we able to generate more profit? So it compares a company's profit to its resources and investment, right? A relative measure, profitability, absolute measure, or quantitative measure, that is profit. So option D is correct. Next, ROA and ROE, the return on asset and return on equity. This is a topic from where you will also get numericals. Numerical type questions will definitely come from this topic. Two or three very simple formulae are used here to calculate the ROA and ROE, and these are very scoring topics. We have covered these topics in the previous sessions. Make sure that you watch them. All right, so what is the difference between ROA and ROE? ROA measures the profitability from assets and ROE measures the profitability from equity. ROA is always higher than ROE in banking. Banks typically aim for a higher return on assets than return on equity. Leverage can lead to a higher return on equity compared to return on assets. Yes, answer this question. How do we determine the return on asset? We determine the return on asset by the amount of income that it earns on the net interest income and fees. What is the net interest income? The income, the interest that we receive on assets minus the interest that we pay on liability. So the interest received minus interest paid. This is the net interest income. All right. The interest earned on securities plus loans minus the interest paid on deposits and borrowings. That is ROA. It tells how well the bank is earning income on its asset. What is the formula for return on assets? Net income, net income divided by the average total assets. Average total assets. That is the assets at the beginning of the year and the assets at the close of the year, adding them, dividing by 2. And what is ROE? Return on equity. Return on equity tells us what the bank owners are primarily interested in because this is what they earn on their investment, the equity that they earn. All right. So here the correct answer will be yes, the correct answer will be option B. Option B. 1 and 4. ROA measures the profitability from assets. ROE measures the profitability from equity, like we just discussed. And the leverage can lead to higher ROE as compared to ROA. Also, you need to understand what is the meaning of leverage. What is the meaning of bank using higher leverage? There is the leverage ratio. Leverage ratio is the bank asset divided by the bank capital. Bank assets divided by the bank capital. All right. If we are using more leverage, it means we are using or we are creating more debt to earn more income, right? So leverage ratio can be same as the debt ratio and the return on equity can be increased by increasing the leverage, right? So yes, the leverage can lead to increased ROE compared to ROA. And banks are more focused on the return on equity because this is what they're earning on their investments, right? So the banks typically aim for a higher ROE than higher ROA. ROA and ROE, please repeat. We have discussed these concepts in detail in the whole syllabus discussion. Let us go through it again. Return on equity. The banks, they invest in various types of avenues and they earn their income. That is return on equity, right? The return that they get on their investment. What is the formula for return on equity? It is the return on assets multiplied by the leverage ratio. All right. Return on assets multiplied by the leverage ratio. We have already seen what is the formula for return on assets. It is net income divided by the bank assets, right? Net income divided by the bank assets. And second part, leverage ratio. What is the formula for the leverage ratio? The bank's asset divided by the bank capital. All right, this is how we calculate the ROE. So ROA, the return that the banks get on their assets, the assets that they create, loans and advances. And ROE, the return that the banks get on their investments, the equity that they earn on their investment. All right. Okay. Next question. How are net interest income and interest rate spread related in banking? What is the meaning of net interest income and interest rate spread? It is nothing. Both the things are same. Basically, the income that we receive and or the interest that we pay, right? Interest that the banks receive on the assets that they create and the interest that the bank pay on the liabilities, that is known as the net interest income or the interest rate spread. Interest rate spread will be higher when we are receiving more interest on the assets. So the net interest income is the difference between the interest received on asset and the interest paid on liabilities. Interest rate spread is calculated as the difference between the average interest rate earned on asset and paid on liabilities. A higher interest rate spread always leads to a higher net interest income. Net interest income is unaffected by changes in the interest rate spread. This is a bit complicated, this question, but if you read the statements carefully, then you can answer it correctly. All right, answer this. So we have already seen the meaning of net interest income and the interest rate spread. Both of these mean the difference between the interest received on asset and the interest paid on liabilities. And out of these statements, only these two are correct. So the correct answer is option A. A higher interest spread will not always lead to a higher net interest income because interest rate spread is the average. It is not an absolute number, it is just an average. And is the net interest income unaffected by the changes in the interest rate spread? No. It depends on the interest rate spread. The difference of the interest that we can charge on the loans and advances and that we have to pay on the deposits. All right, so the correct answer is option A, 1 and 2. Do not get confused, both of the things are the same. Difference between the average interest rate earned on assets and paid on liability. So average is the interest rate spread, absolute is the net interest income. Both the terms mean the same. Next question. How does leverage impact a bank's operations? How does leverage impact a bank's operations? Leverage, the concept that we have seen in the return on equity, bank assets divided by bank capital. How much bank assets are there as compared to the bank capital, which is the owned capital? So the leverage increases a bank's profit potential by using more liabilities to fund the asset. Higher leverage always results in higher long-term stability. Leverage can amplify losses as well as profits. Using leverage decreases the risk of capital loss. Answer this question. What does it mean using leverage? What does it mean that the bank is using more leverage? When the bank increases its liabilities to pay for the assets. That is, when the bank is taking debt or loan to give out more assets or to create more assets, this means that the bank is using leverage, right? So the correct answer here will be option C, 1 and 3. Leverage increases a bank's profit potential by using more liabilities. We are using more liabilities to fund the assets, but it does not always mean that a higher leverage will lead to higher profit. It can actually lead to lower long-term stability for the bank. It can lead to losses for the bank. Why? Because when they are creating more assets and they're not paying attention on the types of assets that they're creating, this will lead to defaults. All right. So the leverage can increase the risk of capital loss. If the leverage is too high, this means that even if a few of the borrowers they default on their loan, it will lead to complete wipeout of the bank's capital, right? So if the assets they go down by a certain percentage, the bank capital will be wiped out. This is the disadvantage of using a very high leverage. And that is what happened in the subprime mortgage as well. In the Lehman Brothers crisis, this is what had happened. They were using very high leverage. Then the borrowers they defaulted on the loans and it led to the crisis. The last question is related to it. What lessons can be learned from the Lehman Brothers bankruptcy? What happened in the Lehman Brothers crisis, the subprime mortgage crisis? The Lehman Brothers they gave out easy loans to those borrowers who wanted to purchase houses. Home loans were given, but then they defaulted and it led to the crisis. When they defaulted, it wiped out the complete capital, not only of the bank but of the whole nation. And it affected the global economic space as well. So, high leverage can lead to significant risk, and the correct answer is option B, 1 and 4. Usually, the maximum leverage ratio is fixed by every nation. In India as well, RBI regulates the maximum leverage ratio that the banks can use, and it is somewhere around 10 or 12, not more than that. All right, so this is important. The module B. So in this series, in one session, we'll practice the most important MCQs from each of the five modules. We have already covered the module A. If you haven't yet watched that video, make sure that you answer all of those questions. These are the most important MCQs, and today we'll be starting with module B, which is the most important module from our RBWM syllabus. All right. So we'll try to cover the maximum questions possible, but I think we'll take 2 sessions for module B to cover all the units in this module. All right, so let us start. So you'll see questions on your screen. I'll give you 10 to 15 seconds to answer it. Put down your answers in the comment section and then we'll discuss the correct answers. All right, so here's the first question. Based on Maslow's hierarchy of needs, which of the following banking services best align with the physiological needs stage? So, Abraham Maslow. This question is from our customer requirements unit. That is our unit 5 from module B, right? Abraham Maslow, they gave their theory of motivation. That how people are motivated to achieve certain needs. Yes, a very good afternoon. Please answer this question. So, which of the following best aligns with the physiological needs? Wealth management services, basic savings and checking accounts, personal development loans for self actualization, and option D, insurance products for long term security. So, if you remember the Maslow's hierarchy, it is a pyramid. It is a pyramid that is divided into 5 levels. At the lowest most levels, we have the basic or physiological needs. Then above that, we have the safety needs. Then we have the social needs, self-esteem, and finally, self or full actualization needs. So, yes, option B is absolutely correct. This is the basic savings and checking accounts, the basic level. What we have studied in the Maslow's theory, as our basic needs are fulfilled, then we move up the ladder. We move up the pyramid. Accordingly, physiological needs can be the basics, uh, core savings account, personal accident cover, housing loans. Security needs can be the life insurance products, tax planning, insurance, mutual fund. Then the third level is the social needs, consumer loans, personal loans, car loans. Esteem needs can be the term insurance policies, second housing. And finally, we have the self actualization, that is pensioners' loans. We can put it there, the senior citizens' term deposit. All of these things are there. All right. So I hope you understand the Maslow's hierarchy of needs clearly because this is a very important topic. Next question. What characteristics define the introduction stage of a product life cycle in banking? So this is from the product development process. If you remember the product life cycle, we have in this manner studied the product life cycle. When the product is introduced, it is the first stage. Then as time passes by, it enters the second stage, which is the growth stage. Then we have the third stage, which is the maturity stage, and then the fourth stage, which is decline. We have four stages in the product life cycle. You need to tell me the characteristics of the first stage. High sales and high revenue, low sales value, insufficient revenue to cover costs, high customer awareness and acceptance, time taken for the products to become known to the customers. So option A says 1, 2, and 3, B says 2, 3, and 4, C is 1 and 3, and D is 2 and 4. So, yes, absolutely, option D is correct. In the first stage, introduction, when the product is introduced, the sales volume will be low, and the revenue from the products will not be sufficient to cover the costs of producing, marketing, and servicing it. Why? Because it takes time to the to for the idea to reach the minds of the customers, for the customers to understand them. Yes, D is absolutely correct. Right? So here we see sales on the y-axis and we have time on the x-axis. So as time passes by, we'll enter in the growth stage where the sales volume now increase and the product starts generating profit. The consumer awareness will be more. Then we have the third stage. There is more growth and highest sales is seen in the third stage. There's a wide customer base here. Finally, we have the fourth stage, which is the decline, the staleness or saturation because of competition. You tell me what will happen if I do not cater or I do not try to add some benefits to my product in the fourth stage. That is the decline stage. What will happen then? What will happen if I do not do anything to keep the product in competition, if I do not add any benefits to it? What will happen then? It will lead to death of the product. Death of the product, or the product will now go out of market. All right. Another very important point, in which stage of the product life cycle journey do the bankers they try to keep the product for the longest? In the growth stage, in the maturity stage, or in the introduction stage? In which stage will the bank would try to keep the product longest? Will be the third stage, that is the maturity stage. All right. So the correct answer is option D. Next question. Which factors influence the decline stage of a banking product's life cycle? So the fourth stage, where we see saturation or staleness. What are the characteristics or what are the reasons for the decline of a product? Rapid technology changes leading to obsolescence. Obsolescence means now the product has become old. Better upgrades are available, so people will go towards them. Instant success and long term stability in the market, effective market research and preventing product decline, competition and availability of better products. Which factors influence the decline stage of a banking product's life cycle? So, yes, the correct answer is not B, it is D, 1 and 4. Option 2 and 3, instant success and long term stability in the market, will not take the product in the decline stage. It will keep the product in the maturity. Also, if we have the right marketing research, it will prevent the product decline. Right? Factors that lead to decline are rapid technology changes, and if we are not upgrading our product according to the new technology, and competition, availability of better products. Yes, the correct answer is D. It is not B. All right. So you need to read the statements, the question options very, very carefully. The questions are very simple. If you have the conceptual clarity, the questions that are asked in your RBWM paper are very simple. But you need to read them very diligently. All right. Now let us move on to the next question. Okay. Which factors are typically considered by the credit information companies in India for computing a credit score? Hmm. Okay. Yes. So now answer this question. Which factors are typically considered by the CICs? Customers' income level and employment status, defaults on the previous credit transactions, high utilization of the credit limits on the credit cards, percentage of unsecured loans in the borrower's portfolio. Very simple. What is a credit score? It is a three-digit score that a customer gets, right? It ranges from 100 to 900, from 300 to 900, we can say, right? Higher the score, better or more chances are there for the individual to get the loans sanctioned by the bank, approved by the bank at lower rates of interest, right? So a score above 700 is considered good. Okay, you are saying C, 2 and 3. All right, so now, yes, let us see what is the correct answer. The correct answer is B, 2, 3, and 4. Certain factors that affect the credit score of an individual: the defaults on the previous credit transaction, the payment behavior and payment history, and the previous searches and inquiries. So, all these three factors are important. If you have a high percentage of unsecured loans, like you have availed too many credit cards or personal loans, then this will lead to a lower score, right? So not just 2 and 3, but this is also taken into consideration by the CICs when they are calculating our scores, right? So the CICs are known to include high utilization of credit limit and the borrower having a higher percentage of unsecured loans. All right. What is the meaning of high utilization? Let's say my credit card's limit is 10,000 rupees for a month. I am making payments using my credit card of for rupees 6,000 only. So this is a safe limit. I will be a safe customer. If let's say I'm not only spending the complete 10,000, I'm also overusing it. I am paying on credit, let's say 12,000 rupees. This will be a very risky borrower, right? We are seeking further credit. We are over leveraging ourselves. So the credit score could fall, right? So how can we maintain a good credit score? We need to keep these things in mind. All right. Next question. What is the purpose of the control number in a credit report? What is the purpose of the control number in credit report? To track an individual's credit report from the CIC's database, to calculate the individual's credit score, to record the number of loan applications an individual has, to track the individual's income and expenditure. Yes, now answer this question. This is related to issues in credit scoring. If let's say I have gone to a bank to get a home loan, but the bank rejects my application saying that I have a very low credit score. They show me that my credit score is only 500. Then what can I do? I can go on the website of the CIC and I can check what is my credit score. Plus, I can ask for clarification as to why my credit score is low. Another issue can be there can be a confusion of names. There can be many customers with the similar name in the CIC's database, and the records can get mixed, right? The information can also involve any human error. Identity theft can be another issue. So, what is the role of control number? The correct answer is not to record the number of loan applications, but to track the individual's credit report. Please read the statements and the options very carefully. You need to revise all of these points, very important. Let's say I feel that I have been given this low credit score wrongly, right? Or there is some inaccuracy in my credit information report. So what will I do? I will contact the bank that has declined my loan application. I will ask for a clarification and request them to provide this control number. The control number will be a 9-digit unique number and it helps to track an individual's credit report from the CIC's database. It will be generated when the bank they pull out my credit report. All right. So the CIC, they will require this number. It will enable them to view the exact details that the bank has seen when they drew the report. All right. So this is the purpose of the control number. Okay. I will be given a unique control number that will help the CIC check all the details that have been put in my report. All right. Okay. Next question. What is the primary reason for the banks not paying or paying low interest on the demand deposits? If we are talking about the CASA deposits. So on the current account, no interest is paid by the bank. And on the demand accounts, demand deposits, the bank pays an interest, but it is quite low as compared to the fixed deposit. What is the reason for it? Does it lead to high profitability for the banks, low transaction costs? The reason is because it involves a large number of transactions, or there are some regulatory restrictions. Does RBI say that only a fixed rate of interest can be given to the customers? Does RBI regulate this interest rate? Answer this question. What is the reason of low or zero interest rate on the CASA deposits? Till then, we will discuss the main features of these deposits. Like if we are talking about the current deposit account, it is a non-interest bearing. There needs a higher minimum balance to be maintained. There are charges on the short-term funds or overdraft borrowed from the bank. It does not promote savings habit, as is the case with the demand deposits. And these are the basic characteristics. There's no restriction on the number and amount of withdrawals. So, yes, the correct answer here will be option C because there is large number of transactions involved. In the fixed deposit or term deposit, there are no transactions. Basically, only once you deposit and then on maturity, you will withdraw the amount. So that helps the banks pay a higher rate of interest. But because there are large number of transactions involved in the CASA deposits, the banks do not offer very high rates. Regulatory instructions, that is different. We have a question on that topic as well, that banks they need to pay a uniform rate of interest. I think the next question is related to it. All right. We have a question related to that as well. Here the correct answer is because of large number of transactions involved. The benefit of CASA deposit is not a interest rate, but the withdrawable, the demand deposits that are withdrawable on demand. All right. The part that you are saying 1 lakh rupees, it says that up to rupees 1 lakh, banks can offer a uniform rate of interest. Above that, banks can offer a differential rate of interest. That is a separate topic. All right. Now answer this question. What is the consequence of not maintaining the minimum balance required in a current deposit account? If I have a current account and I'm not maintaining the minimum balance, what will happen? The account will be closed immediately. No interest will be paid on the account balance. Overdraft facility will be automatically activated. A penalty is charged. Yes, answer this question now. Yes. Which option is correct? A, B, C, or D? The correct answer is option D, that a penalty is charged. The account is not closed. The customer will be given notices that you need to maintain the minimum balance. Interest is already not paid in the current account, and the overdraft facility still continues. Yes, D is the correct answer. Absolutely. Next question. In which legal case did the Supreme Court specify that all transgender persons should be treated as third gender? Okay, now this is related to the opening of the savings bank account. Who can open a savings bank account? A minor? Yes. Illiterate? Yes. Blind persons can open a savings bank account. Incapacitated persons can also get a savings bank account. Similarly, the transgendered persons are also allowed to open a savings bank account. All right. So, in which case, it is a very popular case, this decision was there. The National Legal Services Authority versus the Union of India in 2014, RBI versus the Transgender Persons 2015, Transgender Rights Association versus the State of India 2016, Supreme Court versus the Union of Transgender Individuals 2017. Yes, answer this question. Actually, the correct answer here is no. The correct answer is A, National Legal Services Authority versus the Union of India. Banks have been advised by RBI to refer to this judgment, and all the transgender persons will be treated as third gender. That is, in the forms or applications, earlier only two genders were given, male and female, but now third gender is also included. All right. All the other cases, these are just fictional cases. These are not real cases. All right. So National Legal Services Authority versus the Union of India 2014. Okay. Next. What is the primary feature of account number portability? This account number portability was recommended by the Damodaran committee. Very important. Institute can also ask you which committee gave the important recommendation of account number portability. If let's say I have an account number, if I have an account in a branch which is in a particular city, but I am moving to another city or another state for my employment reasons because of a transfer, then earlier the customers were not allowed to use the same account number. But because of the Damodaran committee, this account number portability has been allowed. So what is the primary feature? The customers can change their account numbers when they move to a different city. The customers maintain the same account number even when transferring to a different branch or city. The account numbers are automatically changed every year for security reasons. The customer can only transfer accounts within the same city. Yes, you are absolutely correct. The correct answer is option B. All right. So if you move from one city to another, or if you want to transfer your account from one branch to another, this facility is allowed, right? So simply the account holder will approach the branch to transfer his account to another branch. A letter will be obtained, right? The letter will be duly signed and it will be sent or handed over to the transferee branch. So this decision was because of the recommendations of Damodaran committee. Hmm. Next. What documentation is required from the customer to proceed with account closure? Now, if a customer wants to get the account closed, what is the procedure for that? A letter requesting account closure signed by all the account holders or partners, a letter of indemnity, a recent bank statement, proof of address. What is the correct answer? This is also very simple. Yes, the correct answer is option A. Simply, when a customer wants to close their account, they will go to the bank with a letter. Along with the letter, they will specify, they will request the bank to close the account, but it has to be duly signed by all the account holders or the partners. All right, this is very important. Then, any check that is pending under collection or any pending transaction, guarantee, any locker allotted, this will be checked by the bank. All the dues will be covered and then the account will be closed. No other document is required, only a letter signed by all the account holders and the partners. Why partners? Because if the account is of a company, then the board resolution will also be required. All right. Next, which of the following is not an allowed holder of a savings bank account? Who cannot open a savings bank account according to RBI guidelines? Which of the following entities cannot open a savings bank account? Option A, individual salary earners. Option B, business entities. Option C, government departments. Or option D, the non-profit organizations. Which of these cannot open a savings bank account? Yes. No, no, why? Option B is correct. Individual salary earners, for them, the savings bank account has been designed so that they can save regularly a part of their earnings and they can earn interest on it to inculcate the savings habits. No, business entities. Savings bank account for business entities cannot be opened. For them, only current account will be opened so that they do not utilize. If a business entity is allowed to get a savings bank account, they have a large earning, they will put it in the savings account and earn interest on it, right? So that they do not misuse this facility, they are not allowed to get a savings bank account. Next question. What are the requirements for a minor to open and operate a savings bank account? Minor, if they want to get a savings bank account, what is the requirement? Now, this requirement comes under the Indian Contract Act as well as the Indian Majority Act, which says that any person who has not attained the age of 18 years is a minor. And the Indian Contract Act says that a minor is not capable of entering into a valid contract, but that is not the case with opening of a savings account, right? So the savings bank account in the sole name of the minor can be opened. What is the criteria for it? The minor must be at least 10 years old and able to read and write. That is, they should be illiterate. They should be literate. They should not be illiterate. The account should be jointly operated with a guardian. The minor can operate the account without any supervision if below 10 years. A checkbook facility is automatically provided to all minor account holders. So, yes, the correct answer is option A. The minor must be at least 10 years old and able to read and write. All right, they should be above 10 years of age. Yes, sorry, there was some technical issue. All right, so the correct answer is option A. We were discussing the requirements for the savings account of a minor. They should be able to read and write. The account opening form should be signed by the minor. Then, if the minor is, let's say, below the age of 10 years, then the account can be opened in the sole name of the minor, but it should be operated by the natural guardian. Natural guardian is the father or mother. No overdraft should be granted in the savings bank account, and checkbook facility on request can be provided automatically to all the minor account holders. The checkbook is not to be given, right? It can be given if requested otherwise. So all of these points are important. All right. Next question. What are the terms and conditions for opening a joint account with two or more illiterate persons? Can two or more illiterate persons, with them a joint account can be opened? Yes. Then what are the criteria? The account can be operated individually by any account holder. The joint account holders must be close relatives and operate the account jointly or by survivors. The checkbook facility is provided. A note explaining the implications of the joint account in the vernacular language is required. So, illiterate person unable to read and write, they can come to the bank, affix their thumb impression, and get the account opened. All right, there is no restriction on this that an illiterate person cannot get a savings bank account. But there are certain prerequisites that have to be made sure of, like no checkbook facility should be extended. The name of the account holder, nature of account, and the account number must be written in bold numbers, in bold letters, as well as the recent photographs should be taken. And in the case of a joint account of an illiterate, it can be opened with a literate as well, but that literate should be a close relative. So the correct answer is option B, yes, 2 and 4. Close relatives and all the implications of the joint account should be mentioned. All right. This is important. When we are talking about a close relative, the institute can separately ask you, can a joint account of an illiterate can be opened with a literate father, son, husband, wife, mother and daughter? Yes. Can a joint account of an illiterate be opened with a literate cousin? So no. Cousins are not allowed to open a joint account with any illiterate person. Then, what special measures are taken for the bank accounts of persons who cannot sign due to loss of both hands? So now we are talking about the incapacitated persons. If they have lost the use of both hands for opening their account, what will be the procedure? Only digital signatures are accepted. Accounts for such persons are not allowed. A legal guardian must always operate the account. A mark, including a toe impression, is accepted as a signature. Yes, answer this question. The correct answer is D. Yes. A mark, including a toe impression, is accepted as a signature. All right. So the handicapped person may be requested to put her or his toe impression on the relevant forms in the presence of the branch manager or the joint manager as well as a witness. All right. Also, if any person is, let's say, incapacitated due to illness or any reason or any other reason, and they're unable to come in person to bank to withdraw money, then they can put their thumb impression, which will be witnessed by the independent witnesses, and they can come to the bank on the holder's behalf. All right. So, yes. Next, what are the conditions imposed by RBI on banks for setting interest? Now, this is the topic that we were talking about, that you asked, right? RBI restrictions up to rupees or more than rupees 1 lakh. This is the topic. RBI does not fix the interest rates. Banks, they have the discretion. They can decide the own interest rate that they will pay on the savings deposit. But certain maximum minimum limits are there. Like, banks can offer the variable interest rates for deposit below rupees 1 lakh. A uniform interest rate must be offered on deposits up to rupees 1 lakh. The banks are required to offer higher interest rates for deposit over 1 lakh, and the differential rate of interest can be offered for deposits over 1 lakh rupees. Hmm. So yes, this is correct. For the deposits below rupees 1 lakh, a uniform interest rate should be there, and above 1 lakh, the banks can offer differential rate of interest. B. Absolutely. All right, so I hope you understand this topic regarding the deregulation of interest rate. Next question. Who can open term deposit accounts for minors? Now, when we are talking about a term deposit, can minor open a term deposit? Yes. Who can open it for them? The minor themselves in their sole name or operated by the guardian. Only the legal guardians of the minors. Minors only if co-signed by an adult, or only the parents of the minors. Answer this question. Yes. So a minor can get a term deposit in their sole name, or they can also get the account operated by a guardian. Both the options are there. All the other terms and conditions will remain the same. All right. Nothing else will change. Then, what is the impact of the penalty on the interest rate in the case of premature withdrawal of an FD? Banks, they allow premature withdrawal of the fixed deposit. What will be the impact? The penalty does not affect the interest rate. What is the correct answer? Yes, the interest rate is reduced by the penalty amount. I'm so happy to see all the correct answers. This is the main, we will say, benefit of the RBWM paper. These things you are dealing with on a daily basis. All right. So, the interest rate in the case of premature withdrawal will be paid at the rate applicable to the period for which the deposit has remained with the bank. For the remaining period, we can decide to get the penalty. All right. So, if the penalty is 1% and the rate of interest that was paid on the fixed deposit was 9%, then the interest will be paid at 8%. It will be reduced by the penalty. All right. Next. What happens under the auto renewal system for the fixed deposit in banks? Banks, they offer auto renewal if the customers they instruct, or if they do not come to collect on maturity. So the FD is automatically broken and the funds are transferred to the savings account. The FD is automatically renewed for a similar period as the original deposit. The FD is renewed at the interest rate prevailing on the date of maturity or renewal. The auto renewal period and the interest rate are the same across all the banks. Which option is correct? 1, 2, and 3, 2 and 4, 2 and 3, or 1, 3, and 4. Yes. So, on the date of maturity, such deposits are automatically renewed normally for a similar period, as well as the rate that is prevailing on the date of renewal. It is not necessary at the original deposit, but prevailing at the date of the maturity or the renewal. So, the correct answer is 2 and 4. All right. Actually, 3 should also be correct, right? Because when it is renewed, normally it is for the similar period as well as the rate that is prevailing on the date of maturity. But it can differ from bank to bank. Banks, they can decide to pay a different rate of interest, or they can decide to pay the original rate of interest. So it depends on the bank. All right. So this will be incorrect. The auto renewal period and the interest rate will not be same across the bank. The correct answer should be 2 and 3. Not B but C. C will be the correct answer. Yes. 2 and 3. Correct. Okay. Next question. According to RBI's recent rule, what happens if a fixed deposit matures but the proceeds remain unclaimed? Same question, same concept. On the maturity, if the proceeds remain unclaimed, then the matured FD amount is forfeited by the bank. It is acquired by the bank. The unclaimed amount attracts an interest penalty. Interest is paid at the saving account rate or the contracted FD rate, whichever is lower. The FD is automatically renewed for an indefinite period. So this recent rule was made by RBI on 2nd July 2021. The rule made on 2nd July 2021. So, according to the new rules, yes, if the fixed deposit is matured, but the proceeds are not renewed and they remain unpaid and unclaimed with the bank, then the amount which is not claimed will attract the rate of interest applicable to the savings account or whatever is decided during the entering of the contract. So the correct answer is yes, it is option C. Great. Next, how many nominees can be operated for a jointly operated locker account? So now we are talking about the nomination facility. The nomination facility, which is offered to all the types of deposit holders, locker holders as well. Articles kept in safe custody, safety lockers. What will be the correct answer? Up to two nominees are allowed, only one nominee is allowed. More than two nominees, no nominees are allowed for the jointly operated locker accounts. More than two, up to two, up to two. Earlier, only one nominee was allowed, but now the nomination more than one person is permissible in the jointly operated locker accounts, but there should be common consent from all the holders. This is as per the information which is given in your Macmillan book, and we need to follow that. All right. As per the guidelines, nomination can be done in favor of one person only. But in the case the locker account is held jointly, it is operated jointly, then the nomination can be made in the favor of more than one persons, up to two persons as well, up to two nominees. All right, this is clear. Okay, so yes. Then, what is the bank's approach when a deceased locker hirer has not made any nomination or where there is no clear survivorship clause? Clear. All right, great. Now answer this question. There are many cases, accounts that have a survivor or the nominee clause. There, the settlement is very simple. If the depositor had utilized the nomination facility, it can be either or survivor, anyone or survivor, former or survivor. The payment will be made to the nominee of the deceased deposit account holder. All right. There can be a situation without the survivor or the nominee clause. What will happen then? So the bank automatically transfers the contents to the government. The bank adopts a customer friendly policy in consultation with the legal advisors. The locker is permanently closed. Access is given only to those with a legal succession certificate. Here, the institute will confuse you. Basically, banks, they will follow their risk management system, right? They will take help of their legal advisors and they will try that no hardship is caused on the legal hires of the deceased depositor, right? So, up to the claims in respect of the deceased depositor could be settled without insisting on production of any documentation other than a letter of indemnity. So, the correct answer will be that the banks adopt a customer friendly policy. They do not require any documentation like a legal succession certificate. All right. The banks, they will depend on their own judgment on the case to case basis and they will try to avoid any inconvenience, any undue hardship to the legal heirs. Yes, a simplified procedure will be followed. Clear now? No documentation is required here. They will not be required to produce any documentation. In certain cases, a letter of indemnity can be asked for. A letter of indemnity can be asked for. All right. All right. So from module C, you will see around 20 to 25 marks questions in your exam. All right. So all of these questions are very important. Make sure that you practice them, you revise all of the topics that we are discussing today. So let us start with the first question. Right. So the first question says, what is the focus of marketing analysis stage in the marketing process? We are talking about marketing in retail banking. There are different stages in marketing. We have marketing analysis, marketing planning, marketing implementation, and marketing control. So the question asks us, what is the focus of the marketing analysis stage? Option A says defining the strategic business units and setting goals, analyzing markets and marketing environments for product introduction, implementing the marketing strategies, regulating goals through auditing and measuring. What is the correct answer? The focus of marketing analysis. So the correct answer here will be option B, that is analyzing markets and marketing environments. So what happens in this stage? What we are doing, we are gaining insights into the market and the competitors. And for this, we can use the SWOT analysis. The strengths, weaknesses, opportunity, and threats. This analysis will help us to see the market, what are the marketing environments, how the competitors are behaving, and so on. Then second stage is the marketing planning. After we have analyzed the market in which we want to enter, then we will define the SBU, goals and objectives. Third is the marketing implementation. Now that we have created plans, we will answer questions like who, where, when, and how. Right? This will depend on blending people, culture, structure, decision, and reward systems. And finally, we have the fourth stage, which is marketing control. This is the stage in which the organization performs the job of regulating its goals. So, auditing, measuring, evaluating, and acting upon the defined parameters. The questions are formed in this manner only. Either the institute can ask you what is the focus of any of the stages like marketing implementation, or they can ask it the other way around. In which stage of marketing in retail banking? We answer questions like who, where, when, and how. So you should understand this concept clearly. Next question. What are the key components of the marketing planning stage? This is another way in which the question can be formed. What are the key components of the marketing planning stage? SWOT analysis for gaining market insights, performing activities in the right manner, taking corrective action at operational or strategic levels, defining strategic business units, goals, and objectives. So, we just discussed in the marketing planning stage, we are doing what we are planning. We are creating a blueprint, draft, and this draft is known as an offering. What is included in the draft? We are creating an executive summary, the action programs, budgeting and controls. Specific strategies are chalked out for targeting, positioning, marketing mix, and expenditure. So, in the marketing planning stage, we are defining the strategic business units, goals, and objectives. If we are talking about the SWOT analysis, we are referring to the first stage, which is marketing analysis. Performing activities in the right manner is marketing implementation. Corrective action is marketing control. So these four stages and their characteristics are very important. Next, how is price defined in the marketing mix of retail banking? There are 7 P's in the marketing mix. We have product, price, promotion, place, people, process, and physical evidence. And they play a very important role for the banks. So, how is price defined in marketing mix? The fees for changes for the charges for the different banking services, the interest rate offered on the deposit products, the overall cost of banking operations, the cost of advertising and promotion. So the 7 P's. Product, anything that has the capacity to provide the satisfaction. Price, that the question asks, it refers to the resultant transaction cost to be borne by the banker, to be borne by the banker or the customer depending upon the product offered. So on the liability side, transaction cost is borne by the banker, and on the asset side, it is paid by the customer. So price refers to the fees or charges for the different banking services and the interest rate offered on the deposit product. So option A, 1 and 2. Other than that, promotion refers to the efforts that the banks take to reach the customers, place the where the bank is offering its product. Earlier, we were only referring to the location of the branch, but now place is defined by the electronic mode, internet, mobile app, ATMs. People, people, internal customers, that is the staff, as well as the customers of the bank. Process, the product development, product structuring, delivery stage. And finally, we have physical evidence because banking is a service. So, providing tangibility, like if a customer is coming to the bank with a request of an account opening, along with the account, bank offers a debit card, ATM card, checkbook, passbook. So, these are physical evidence of a service. These 7 P's are very important. All right. How do the 7 P's of the marketing interact to enhance the effectiveness of retail banking strategies? What is the role of the 7 P's in the retail banking strategies? Which of the following statements are correct? Each P functions entirely independently and does not influence the effectiveness of the others. The effectiveness of one P, such as the product, is dependent on the effectiveness of other P's. The success of the marketing strategies is solely dependent on the product offering, and the integrated approach of the P's contributes to the holistic effectiveness. So basically, we need to figure out, we need to answer whether the P's are dependent on each other, the 7 P's, or they are independent. They work independently, there's no integration. So, is each P functioning entirely independently? No. One P influences the success of another P. These are interlinked, right? Success of one P depend upon the success of another P. Independent as well as interdependent, right? Second statement, the effectiveness of one P, such as product, is dependent on the effectiveness of other P's like price, promotion, and place. Yes, if we have introduced a product in a wrong place, a product that would be more beneficial to the rural class, we are offering it in the urban sector, or the price is not set according to the marketing strategies, or promotion is not done in the right manner. So this, even though the product was a good idea, but it will lead to loss for the bank. All right. So yes, second statement is correct. The success in the marketing strategy in retail banking is solely dependent on product offering. All the 7 P's play a very important role. So solely it is not dependent on product offering. And the integrated approach contributes to the holistic effectiveness. So yes, the correct answer is D, 2 and 4. The P's are interdependent and independent. One P influences the other P's. They individually contribute, but they are also interlinked, such that one P will be a deciding factor for the effectiveness of other P. All right. Next question. What is the reversal and compensation policy in the Aadhaar payment bridge system in the APBS for a delay in crediting the beneficiary's account? So, if a credit transaction is initiated by a user, but the transaction is not completed, banks have to complete it in a given time period, plus for a delay they need to pay a compensation. So regarding this, which of the following statements are correct? Reversal to be effected by the beneficiary bank within T plus 3 days. Beneficiary bank to reverse a transaction within T plus 1 day. 100 rupees per day compensation if the delay is beyond T plus 1 day, or no compensation is provided in case of APBS transactions. Answer this question. Even in ATMs, if there is a delay of, if let's say the account has been debited but the cash is not dispensed, at there also there is this mechanism of reversal and compensation. Yes, so the correct answer here is B, 2 and 3. The auto reversal should be done within T plus 1 day, and beyond T plus 1 day, if there's any delay, 100 rupees per day compensation will be paid. This is the harmonization of the turnaround time. Let's say we are talking about automated teller machines, that is our ATMs. Customer's account is debited, but the cash is not dispensed. So here reversal within T plus 5 days plus 100 rupees compensation is to be paid. If we are talking about the IMPS, account is debited but the beneficiary account is not credited. Here the time period is T plus 1 day. Similarly, for the APBS, T plus 1 day and 100 rupees compensation. All right, in the PPIs as well, on the off us transaction and the on us transaction, T plus 1 day and 100 rupees compensation. All right, so the harmonization of turnaround time is very important. Okay, next question. What does the classification stage in the CRM implementation involve? So now we are talking about the customer relationship management. There are certain stages or implementation aspects of the CRM. We have the business processes, information systems, and the internal organization structure. So here in the classification stage, what steps are involved? Categorizing customers based on profitability and service costs, offering uniform products to all the customer segments, ignoring data from the past customer interactions, applying data mining techniques to organize customer data. So what happens in the classification stage? If we are talking about the customer relationship management in retail banking, these three factors, banks have to manage the customers and the relationship as well for the longer term, right? So customer centricity, capturing the customer's profile, creating a 360-degree view of the customers, establishing a healthy relationship. CRM is needed to increase the operational efficiencies, to derive more value from the employees, increasing competition, to tackle the rising NPAs. So, yes, the correct answer here is option D, 1 and 4. The customers, they are categorized based on profitability and service costs, and then accordingly, based on the characteristics, products are offered to them. And data mining techniques are implemented or applied to organize the customer data. All right, so this is the correct answer. So how does the CRM work? Appropriate data classification. How do we accumulate the data? Through verbal communication, internet, email advertising, and telephone marketing. Then the data composition and insertion into the organizational database, collection of the analysis of data, and then finally this information is disseminated to various components like the support team, selling team, marketing team, and management. The other implementation: first, identification of customers; second, classification of customers; third, interaction with the most valued customers; and fourth, customization of the bank's products and services for these different segments that we have created. Right. Now, answer this question. What was the role of the BCSBI in the banking sector? So, in 2003, RBI had constituted a committee on procedure and performance audit of public services. This was under the chairmanship of Shri S.S. Tarapore, right, who was the former deputy governor. And the main objective was to address the issues relating to the availability of adequate banking services. So, we were talking about the benchmarking of banking services to the customers. So, what was the role of BCSBI? To enforce mandatory regulations on the banks, compulsorily the banks have to follow, to set the minimum standards of banking practices, to replace the regulatory instructions of RBI, to directly address and resolve the individual customer complaints. So, the most important point about BCSBI is that it was a voluntary code of conduct. Banks, if they want, they can become a member of the BCSBI. It was a collaborative effort of RBI and the banks, and it sets the minimum standards that the banks they should follow when they're dealing with the individual customers. However, it does not replace or supersede the regulatory or supervisory instructions of RBI, and banks will have to comply with such instructions given by RBI from time to time. Also, it is not a forum for the redressal of individual grievances. So, the correct answer will be option B. Now, the BCSBI has been dissolved, but it was set up as an independent and autonomous body to formulate the codes of conduct to be adopted by the banks voluntarily for ensuring the fair treatment of the customers. So that is why understanding the BCSBI is very important. So we'll remember the name of the committee as well as the objective. Next, what are the two codes brought out by BCSBI? So in 2006, the BCSBI was set up with these aims and objectives, and then two codes were brought out. What are these two codes? Code of Banks Commitment to Government Policies, Code of Banks Commitment to Customers, Code of Banks Commitment to Micro and Small Enterprises, Code of Banks Commitment to International Banking Standards. So this is a very simple question. So the two codes brought out by BCSBI are the Code of Banks Commitment to Customers and Micro and Small Enterprises. So the correct answer is option B. The Code of Banks Commitment to Customers was released by Dr. Y.V. Reddy in 2006. And then if we are talking about the Code of Banks Commitment to the MSMEs, this was brought out in 2008. So 2006 and 2008. And as the name suggests, the standards banks have to follow when dealing with the customers and standards that banks have to follow when dealing with the micro and small enterprises. Right. Next, what information is displayed by the member banks in their branches and on their websites? So, banks who become a member of the BCSBI they need to display certain information at their branches as well as on their websites. What is this information? The services provided by the banks, minimum balance requirements and charges for non-maintenance, policies on deposits, check collection and grievance redressal, exclusive offers for the high net worth individuals, products that are covered under the code or where they are applied, current account, savings account, term deposits, PPF, payment services, services related to the government transactions, demat accounts, and so on. Right? Customers here have the right to fair treatment, right to transparency, fair and honest dealing. They also have the right to suitability, the right to privacy, and right to grievance redressal mechanism. So, under the right to transparency, fair and honest dealing, banks have to display in the branches the services that they offer, minimum balance requirement, information available in the booklet form, deposits, check collection, grievance redressal, compensation, and so on. But exclusive offers for the high net worth individuals is not a requirement. So the correct answer is option A, 1, 2, and 3. Next question. What information do the member banks display in their branches regarding the grievance redressal? So banks, they will have to deal quickly and sympathetically. When the things go wrong, there's a deficiency in service and the customer files a complaint. So what information is to be displayed? The names and contact details of all bank employees, the name of the official at the branch level to approach for grievances, name and address of the regional or zonal manager or the principal nodal officer, name and contact details of the banking ombudsman. So, what is required? Banks should correct their mistakes promptly, cancel any bank charges that they apply by mistake, compensate the customers for any financial loss, handling the customers' complaints promptly and as quickly as possible, telling the customers how to take their complaint forward if they're still aggrieved, if they're not satisfied, suitable alternative avenues to alleviate the problems arising out of technological failures, and they have to display in their branch name of the official that the customer can approach, the principal nodal officer, regional or zonal manager, if the grievance is not redressed at the branch, and the banking ombudsman under the integrated banking ombudsman scheme of 2021. So the correct answer is option B, 2, 3, and 4. They need not display the contact details of all bank employees. 2, 3, 4 is important. All right? Yes. Next question. How does BCSBI collect information for rating the member banks? So there's a rating that the BCSBI uses. This is the code compliance rating. So for this, they carry out survey of the select branches of the member banks to see whether they are implementing the codes or not. So from where do they collect this information? Through structured questionnaires at the select branches and the central processing centers, exclusively through online customer surveys, by assessing the bank's annual financial reports, via the customer feedback and technical assistance from CRISIL. So, the BCSBI's authorized representatives, they collect information using questionnaire. They also visit a sample of branches and the CPCs, both in the semi-urban, rural, metro, all the categories. Feedback from a few customers is also obtained to understand their experiences, right? And technical assistance of the rating agency CRISIL is also used. So the correct answer is D, 1 and 4. Banks' annual financial reports and online customer service only are not assessed, right? So D is the correct answer. Now, code compliance rating is published in the public domain. This may enhance or diminish the image of the bank. Therefore, this triggers the member banks to improve their functions for a better rating. The data which is obtained is converted. This could be a qualitative data. The data is converted during the branch visits and customer responses to into a numerical score. Out of 100, scoring is given. The parameters that is used is, we have 5 parameters. Information dissemination. Is there transparency and a fair manner in which the information is provided to the customers? Then transparency. Correct and full information is given. Customer centricity. The customer's needs are understood by the bank. Grievance redressal. And finally, we have customer feedback. So these are the rights that are available. Accordingly, the parameters are used to give rating to the banks. And weightage for these parameters: 20 out of 100 for information dissemination, 22 out of 100 for transparency, 30 for customer centricity, 15 for grievance redressal, and 13 for feedback. Total 100. So scoring is done, and out of 100, the score is given to banks. Higher score, better image of the bank will be. All right. So these categories, these parameters are important. Next, what are the rating categories used by the BCSBI? So out of 100, high 85 and above average 70 to less than 85, average 60 to less than 70, below average below 60, exceptional 90 and above, satisfactory 50 to 60, inadequate below 50 and needs improvement 60 to 70. Yes. So we have just discussed the parameters and their weightage. Accordingly, the score so obtained and the scoring scale out of 100 is used. What is the scoring scale? We have the category high, then we have above average, average, and below average. These are the 4 categories. High is any score more than 85. If the score is 70 to 85, then the bank will fall in the above average category. 60 to 70 in the average, and below 60 in the below average category. All right, so the banks, they will try to maintain the score at least above the average. So this is the rating. Accordingly, the correct answer is option A, 1 and 2. This rating is also important. Parameters, their weightage, and then how the rating is done. These topics are important from the chapter. All right. Next question. What is the procedure if a customer does not receive a satisfactory response within 30 days? So we are talking about the integrated ombudsman scheme or the grievance redressal mechanism. Whenever a customer faces a deficiency in service, there's a delay in the account opening or crediting of their balance or loan account, whatever, right? So the customer will first file a complaint to the bank. They can also take the complaint to the principal nodal officer. Bank has to give a response within 30 days. If no response is given or if the customer is not satisfied, then what will happen? The complaint is considered closed. They may approach the banking ombudsman appointed by RBI. They are directed to court for the further action. The bank staff explains the procedure for approaching the banking ombudsman. Yes, so if the customer is not satisfied with the bank's response, they may approach the banking ombudsman, and it is the responsibility of the bank staff to explain the procedure how they can approach the banking ombudsman. So the correct answer is 2 and 4. Next, what is the impact of adopting the code of bank's commitment to the customers on other voluntary codes of IBA? So, BCSBI is one code. There are other voluntary codes of IBA as well. Like we have the Bankers Fair Practice Code with effect from June 2004. We also have the Fair Practice Code for the credit card operations and the Model Code for collection of dues and repossession of security. So, how are these voluntary codes effective if the bank becomes a member of the BCSBI? It makes the other voluntary codes inapplicable to the member banks. It requires all the banks to follow the Fair Practice Code of credit card operations regardless of their membership. It continues the application of the Model Code for the collection of dues and repossession of security for the members as well. The non BCSBI members continue to follow the IBA codes. So, which of the following statements are correct? Basically, with the adoption of the Code of Banks Commitment to Customers by the member banks who were the members of BCSBI, these three codes would not be applicable to them. They would not be required to follow the three codes of IBI. However, member banks who are not the members of the BCSBI or they are not eligible to become the members of the BCSBI, they will continue to follow these rules of IBA. All right, so the correct answer is D, 1 and 4. So if you become a member of the BCSBI, the other fair practice code will be inapplicable. And if you're not a member, then you will follow the other codes. Very important question. All right. Okay. Next. What are the major functions of the CEPD? So now the BCSBI has been dissolved and the functions of the BCSBI have been given to the CEPD. Right? So what are the major functions? Administering the banking ombudsman scheme, acting as a nodal department for the erstwhile BCSBI, handling all the investment related complaints, directly managing the individual bank operations. So with the setup of the with the setup of the CEPD, the Consumer Education and Protection Department, it will no longer be necessary for a complainant to identify under which scheme he should complain with the ombudsman. Earlier, there was the Banking Ombudsman Scheme of 2006, the Ombudsman Scheme for NBFCs 2018, and the Ombudsman Scheme for Digital Transactions 2019. They have been integrated into the single scheme. One Nation, One Ombudsman, Integrated Ombudsman Scheme of 2021. All right. So this also comes under the CEPD. So the correct answer will be option C, 1 and 2. Investment related complaints and managing the individual bank operations is not a function. Yes. So this is the correct answer. Next question. What are the implications for the regulated entities in cases where an award is issued against them? Now, when a complaint is raised to the banking ombudsman, the ombudsman will ask the banks to produce documents within 7 days regarding the complaint filed by the customer, right? And accordingly, on seeing the documents, they will give an award. Now, both the customer as well as the regulated entity or the bank, they have a right to file a further appeal to the appellate authority. But The regulated entity will lose its right to appeal if they have not given satisfactory information within 7 days. Right? So the regulated entity does not have the right to appeal for not furnishing satisfactory information. Let's say they have not given the documents or information, they have given misleading or incorrect information. Then, whenever the award is given by the ombudsman, you cannot take it to the appellate authority. Right? So, this is the correct answer. The regulated entity has the right to appeal against any reward. No, only when they have furnished the satisfactory information. Appeals are always directed to not to the CEO, and they cannot be consisted in a court of law. Appeal can be made only to the appellate authority. Right. Now, who is responsible for representing the regulated entity in the integrated ombudsman scheme? So, when a complaint is filed with the ombudsman, both the complainant, that is the customer, as well as the regulated entity will be given a chance to be heard. Who is going to represent the regulated entity in this situation? The CEO of each regulated entity, any designated employee of the regulated entity, the executive director of RBI, the principal nodal officer in the rank of a general manager or equivalent. So, who has the responsibility to represent the regulated entity? This responsibility is given to the principal nodal officer in the rank of a general manager. Yes. In the context of modern business, what challenge is most commonly faced due to the abundance of market information? So now we are talking about the marketing information system. Three terms are here: marketing, information, and system. There is a huge amount of data which is available on a continuous basis from numerous sources, both internal and external. Right? So, what is the problem associated with the abundance? Difficulty in finding relevant and accurate information, excessive costs associated with storing large volumes of data, over emphasis on traditional marketing techniques, lack of skilled personnel to analyze the market data. So, basically, all of these are issues related to the abundance of market information. But the question asks us the challenge most commonly faced. So, the most commonly faced challenge by the banks is difficulty in finding relevant and accurate information. All right. So, internal sources, various reports or statements like sales report, account report, external sources, secondary sources, newspapers, trade journals, information from the primary sources like customers and suppliers as well. So, correct information in a timely manner is an issue that is most commonly faced. Marketing management and science system. So, what is the role of the internal marketing information subsystem? Data on external market, the name itself suggests it is the internal marketing, so this will be wrong. Information on sales, consumer behavior, and competitors from the sales report. Sales report is an internal source. Real time data on financial market fluctuations. It is again whether we classify it as internal or external source. Data on sales turnover, cost, cash flows, accounts receivable. So when we are talking about the internal marketing information, we are referring to the information available from the internal sources. Sales, turnover, cost, cash flows, accounts receivables. The reports of salesmen on their sales calls contain valuable information. Certain types of information can also be available on the real-time basis. All right. So the correct answer will be yes. B, that is 2 and 4. 2 and 4. All right. Market fluctuations will again be an external source from newspapers, journals, or other sources, right? So external sources come in the marketing intelligence system. Reports by professional marketing agencies can also be used here. Then we have the third component, the marketing research system. The information which is collected will be used for solving the marketing problems. And finally, we have the marketing management and science system. It is a combination of all the above components. So, taking prompt decision, bridging the communication gap, knowledge information explosion, complex marketing activity, all of these are there. So, here the correct answer is option B. This is the RBWM one shot MCQs series, and we have already completed the module A, B, and C. Module D, which is very important from your exam point of view. Here we have the wealth management, importance of wealth management, investment management, tax planning, and other financial services. All of these units are very important, and the MCQs that we are going to discuss today are the most important. So make sure that you like the video, you be here till the end and answer all of the questions in the live chat. Also, don't forget to subscribe to the channel because these sessions on the YouTube channel are going to be very helpful for your exam preparation. So let us start with the first question for today. All right. What can be considered as forms of investment? So first, when we are talking about investment management, we need to understand the meaning of investment. So, consuming more than the current income, depositing money in the bank accounts, purchasing assets like real estate or gold, immediate spending on goods and services. So, when we are talking about wealth management or investment management, what do we understand by investment? Investment basically means we use an equation. Saving is equal to income minus expenditure. The part of our income which is left after all the expenses, that is known as saving. And in economics parlance, savings is equal to investment. All right. So investment will be the part that is saved, right? So once saving is given one individual or institution in the expectation or with the aim of earning more income or capital appreciation, then it becomes investment, right? So consuming less and not immediately spending will lead to investment. So depositing money in the bank accounts and purchasing real estate, gold, or other investment products, that comes under investment. All right. So investment process in which the present consumption is sacrificed for a return in the future. Also, the sacrifice is certain, but getting a return in the future is uncertain. All right, next question. What is the purpose of portfolio appraisal in investment management? To measure and compare the risk and return of the portfolio against the expectations, to guarantee a fixed return on all the portfolio investments, to constantly switch securities to chase market trends, to focus solely on the short term performance. So, first, what is the meaning of portfolio? Portfolio basically means a briefcase. So, a collection of different products and services will refer to an individual's portfolio. If I have a certain income, I am dividing that income into investments or insurance, mutual fund, real estate, gold. This is creating a portfolio. So allocation of money to assets that are expected to yield income or gains over a period of time. That is portfolio. All right. So what do we mean by portfolio appraisal? It means to measure and compare the risk and return of the portfolio against the expectations. We are trying to figure out how well the portfolio is created, whether it is going to help us achieve our goals and objectives or not. That is portfolio appraisal. Next question. What are the primary roles of investment banking? Now, the difference between investment management and investment banking is very important. Investment management is basically already an individual has surplus money with them or surplus funds with them, and they want to manage it. They want to earn more returns on it. Investment banking, on the other hand, is a type of service which helps the individuals or corporate clients to raise funds. So they are in a situation of deficit. So to raise funds, mergers and acquisitions, advisory services, this come in investment banking. So what are the primary roles of investment banking? Providing personal banking and retail financial services to individual customers, facilitating mergers and acquisitions for corporations and other entities, underwriting new debt and equity securities for various types of corporations, offering legal advice to companies on contractual matters. So, as we have already discussed, the difference between investment management and investment banking. Investment banking typically covers two key areas: mergers and acquisition, advisory, and underwriting, raising capital through selling stocks or bonds to the investors, example IPO. So the correct answer here is yes, option B, 2 and 3. 2 and 3 is correct. All right. So when we are talking about underwriting, capital raising and underwriting groups, they work between investors and companies that want to raise money or they want to go public via the IPO process. Mergers and acquisitions for both buyers and sellers of the businesses. Sales and trading, equity research and asset management. All right, so these are the services. Next question. What are the different types of underwriting services provided in investment banking? Firm commitment underwriting, where the underwriter assumes full responsibility for the unsold shares. Best efforts underwriting, where the underwriter sells as much as possible without financial responsibility. All or none, where the deal is void if the entire issue isn't sold. And continuous underwriting, where the securities are sold over an extended period. So when we are talking about underwriting basically here the underwriters or the investment banks, they work as intermediaries. They match the needs of the buyers and the sellers. So companies that are raising or they are bringing new shares into the market and the investors who are going to purchase them. So bringing them together is the role of the underwriter, right? So the three types of services or underwriting services are firm commitment, best efforts, all or none. Firm commitment 100%. The entire issue. The underwriter buys the entire issues. Let's say there are 100 shares that have been issued, and out of those 100, only 80 were uh, the underwriter was able to sell only 80. The remaining 20, the underwriter will take full responsibility. So there's full responsibility for any unsold shares. Best efforts as much as possible. So if 80 of the shares were sold, 20 remaining, so the 20 will be returned to the issuer. So the unsold shares responsibility will not be taken by the underwriter. All or none, either all the 100 shares will be sold or nothing. So the deal will be called off and the issuing company will receive nothing. So these are the three types. So the correct answer is A. Next question. In finance parlance, how are asset management and investment banking referred to? So, investment management, wealth management, asset management, these more or less mean the same thing. And they're completely different from investment banking. So, what is the difference? Asset management is known as buy side, and investment banking is sell side. Both are commonly known as buy side. Asset management is sell side, while investment banking is buy side. Both are termed as sell side. Yes, what will be the correct answer here? So, investment banking helps with corporate finance needs, such as raising funds or capital, right? So, it can involve equity research or security research, making buy, sell, and hold recommendations. But the investment banking firms are also known as the market makers. The investment banking firms are known as the market makers, which provide liquidity or connect buyers and sellers to make the market. Thus, the investment banking is the sell side and the asset management is known as the buy side. Because in asset management, the managers help the clients reach their investment goals by managing their money. These investment goals can be a stable income or returns in the future, pension funds, retirement plans, insurance, equities, bonds, commodities. All right. So the asset management will come on the buy side and investment banker will fall on the sell side. Next. Now we are talking about the tax planning. If income is earned between 1st April 2021 and 31st March 2022, in which assessment year it will be taxed. So the difference between previous year, or which is also known as the financial year, or we have the assessment year. Assessment year. Previous year is the year in which the income is earned, right? Or previous year, financial year is the year in which the income is earned. Assessment year is the year in which now we will pay taxes on the income. I'll be filing my ITR. Both financial year, assessment year, they start from 1st of April and ends on 31st of March. But assessment year is the period in which the income that was earned during the particular financial year is taxed and assessed. So it will be the year immediately following the financial year, immediately after the financial year. So for the financial year, 1st April 2021 to 31st March 2022, the assessment year will be 2022-23. Similarly, if we are talking about 2025-26, the current year is my assessment year. I will pay taxes that I on the income that I have earned in the financial year 2024-25. And for the income that I'm going to earn in 2025-26, I will pay taxes in the assessment year 2026-27. This is how we differentiate. The concept is very, very important. Previous year and financial year is same. Assessment year is the next year. I hope this is clear. All right. When is the income earned in the previous year taxed? In the same previous year, in the following calendar year, in the assessment year immediately after the previous year, or 2 years after the previous year. This thing we have already seen. Yes. So the income which is earned in the previous year will be taxed in the assessment year immediately after the previous year. All right. So basically a period up to 12 months just preceding the assessment year will be my previous year or financial year. And the income that I earn in my financial year will be taxed and assessed in the next year. That will be my assessment year. Why? Because income cannot be taxed until and unless it has been earned. That is why we file our ITR in the assessment year. All right, so this is the whole concept. Next, what is the basic exemption limit for the super senior citizens aged 80 years above 80 years under the old tax regime? So we have three categories: below 60 years of age, senior citizens above 60 years of age, and super senior citizens above 80 years of age. We have the old tax regime and the new tax regime. Regime basically means the tax slabs. What is a tax slab? the tax slabs different for different categories of taxpayers, the tax rates that keep increasing with the increase in the income of the taxpayer. Exempted limit means income up to this level. If the super senior citizen is earning only this level of income, they will have to pay no taxes. So in the old tax regime, for the super senior citizens, the exemption limit is up to rupees 5 lakhs. If they're earning an income up to rupees 5 lakhs, then they'll have to pay zero taxes. Between 5 lakhs and 10 lakhs, 20%, and above 10 lakhs, 30%. This is the old tax regime. Additional health and education cess and surcharge will be applicable. Similarly, in the old tax regime for the individuals below 60 years of age, the exempted limit is income up to 2.5 lakhs. Above 60 years of age and below 80 years, that is senior citizens, income up to 3 lakhs is the exempted limit. So we will remember these things. 2.5 lakhs, 3 lakhs and 5 lakhs. Next, what is the maximum annual contribution limit under section 80C for tax saving instruments? So we can invest our income into various tax saving instruments and claim the deductions, right? We have certain investments under section 80C like the public provident fund, unit linked insurance plans, tax saving fixed deposit, EPF, NSC, mutual fund, life insurance premium, and many other. That comes under section 80C. And the maximum saving options will be up to rupees 1.5 lakhs under section 80C. All right. So what we can do? We can simply invest in these areas and we can save taxes as well as increase our income. So there are provisions to make investments, savings and expenditure in various avenues. Maximum limit 1.5 lakhs. Then, what are some examples of assets considered short term if held for less than 12 months? All right. So we have the difference between short term capital and the long term capital gains or assets. Basically, capital gain is an appreciation in the value of an asset when I have purchased the asset and when I'm selling the asset. So the time period between them determines whether it is a short term asset or a long term asset. All right. Short term, any period less than 36 months is short term, and any period more than 36 months is the long term. But under the short term also we have certain assets where the applicable period is 12 months or less. So which are these assets? Land and building, equity or preference shares, house property, units of equity oriented mutual funds. So land and building come under the immovable property, right? Immovable property, the applicable period to be considered as short term is 24 months. And for the assets for which the 12 months period is considered is equity or preference shares on a recognized stock exchange, securities listed on a recognized stock exchange, units of UTI, equity oriented mutual fund, zero coupon bonds. So the correct answer is C, 2 and 4. Same assets held for more than 12 months and then sold off will be considered long-term capital asset, and immovable property held for 24 months or more will be known as long-term capital asset. All right? Yes. So that is the correct answer. Next, what is the role of a bank when it acts as a corporate agent in parabanking? What is parabanking? When third party products are sold by the banks, insurance products, mutual funds, any other thing, right? So what is the role as a corporate agent? to take on the risk associated with third party products, to distribute the third party financial products like insurance and mutual funds, to provide investment advice on proprietary banking products, to act as a regulatory body for third party financial services. So, when the bank is acting as a corporate agent, they are just acting as an intermediary, right? Banks provide these relevant services through agency arrangement with them. So they act as corporate agent without participation, and they earn certain fees on it. Right? So the correct answer is option B. They distribute the third party financial products. They do not take on the risk. Advisory will come under the investment management, and they do not act as a regulatory body. Regulatory body will still be RBI or IRDAI or SEBI. So the correct answer is option B. Then, what makes mutual funds a liquid investment? What makes mutual fund a liquid investment? Mutual fund basically is a collective investment. It pools the savings from a number of investors who share a common financial goal. Then the asset management company invests the pool created in various market instruments like shares, debentures, and other securities. And the investors are known as the unit holders. They share a profit or loss in proportion to their investments. So, how does mutual fund provide liquidity? The ability to quickly convert the mutual funds unit into the cash, the guarantee of fixed income from investments, the possibility of obtaining loans against the mutual fund units, mutual funds being traded on stock exchanges like individual shares. So, just like individual shares, mutual funds are convertible into money by the way of sale in the market. So, this is how they offer liquidity. So, the correct answer is 1 and 4. They can be converted into cash and they can be traded on the stock exchange. Other features of mutual fund: it provides economies of scale, it is simple. Investors, they can examine the features. There are various choice of schemes like equity fund is there, fixed income funds is there, money market funds is there. We also get tax benefits by investing in selected schemes like the ELSS under Section 80C of the Income Tax Act. All right. Next, what is a unique feature about the hybrid schemes and mutual funds? So we have the equity schemes, debt schemes, hybrid schemes, solution oriented schemes, and other schemes as well, right? Debt schemes, which invest in the debt related instruments and ensure regular income. Equity schemes, they invest in the long term capital growth with some income in the large cap, mid cap, or small cap companies. Solution oriented, like retirement fund scheme or children's fund. Hybrid schemes, they invest in equity and debt instruments depending upon the objective of the scheme. So they combine investment in both equity and debt instruments. So this is a unique feature. All right. Next, what is a unique feature of the money back policies in life insurance? So banks, they also participate in the insurance business, which is known as bank assurance, right? So they distribute these life insurance products or non-life insurance or health insurance, general insurance companies. Endowment policies are there, term insurance, money back policies are there, pension plans are there. Apart from the life insurance, banks also distribute the general insurance, asset insurance. So, what is the feature of a money back policy? The policyholder receives a lump sum after a specific term or on death. The policyholder receives a fixed amount at specific intervals during the policy term. The full sum assured is paid only in the event of critical illness. They are most suited for the senior citizens planning for a secure future. So when we are talking about the money back policies, basically it is an extension of the endowment plan. So the policy holder receives a fixed amount at specific intervals during the duration of the policy. And in the event of the unfortunate death of the policyholder, the beneficiary will be assured to receive a full sum. All right, so the feature is the policyholder receives a fixed amount during the policy term. If we talk about the endowment policy, a lump sum after a specific time period or on death, term insurance for the immediate needs of the nominees or the beneficiaries, and pension plan is suited for the senior citizens. So the correct answer is option B. All right, let's move on to the next question. What are the regulatory requirements for banks to act as corporate agents of insurance companies? So there are different ways through which the banks can participate in the insurance business. They can participate with risk participation, but only through a subsidiary or joint venture, right? Banks undertaking insurance, broking or corporate agency can also be through a subsidiary or joint venture, or they can undertake the broking services departmentally. But here they cannot undertake any risk. They cannot take risk participation. So what are the regulatory requirements? Banks must have a specific amount of capital reserved for insurance business. Banks must exclusively sell the products of one insurance company. Banks need not obtain prior approval from RBI to act as corporate agents on a fee basis. Banks must follow the IRDAI regulations regarding corporate agency. So, when bank is setting up a subsidiary or joint venture to act as a corporate agent, they should have a net worth not less than 500 crores. The minimum prescribed capital should be maintained. The NPA should not be more than 3%. It should have made a profit in the preceding 3 financial years, and the track record of the subsidiary should be satisfactory. However, when the bank is taking this insurance broker departmentally, there will be a board approved policy. They should take a license from IRDAI. A deposit of rupees 50 lakhs is to be made to IRDAI, right? So these are the things that they need to follow. So the correct answer here is C, 3 and 4. All right. So for taking the corporate agency business departmentally, they need not maintain any specific capital. Only when through a joint venture or subsidiary that specific capital has to be maintained. And departmentally on a fee basis, they need not take RBI's prior approval. All right. But this will be without risk participation. Also, the corporate agents can represent 3 life insurers, 3 non-life insurers, and 3 standalone health insurer. So one only is not a restriction. Apart from this, they can represent 2 specialized insurance companies, that is the Export Credit Guarantee Corporation and the Agriculture Insurance Corporation of India. These are the important points. Next, what is the coverage scope of the Pradhan Mantri Jeevan Jyoti Bima Yojana? We have two important social security schemes, the Pradhan Mantri Jeevan Jyoti Bima Yojana and the Pradhan Mantri Suraksha Bima Yojana. Both of the schemes, the subscription age limit, the scope of coverage, how the premium is received, all of this, when the scheme will be closed, this is important. So what is the coverage scope? It covers all individuals regardless of their age and bank account status. It is applicable to individual account holders of participating banks aged between 18 to 50 years. Coverage is provided for death due to any cause. It covers medical expenses in addition to death. So the Pradhan Mantri Jeevan Jyoti Bima Yojana is not for all the age group, but it is only for the account holders of participating banks in the age group of 18 to 50, right? Apart from that, if anyone has multiple bank accounts, they can be eligible to join the scheme through one account only. And benefits rupees 2 lakhs is payable on the members death due to any cause. So the correct answer is 2 and 3, option C. Medical expenses are not covered here. Then in case there is insufficiency of balance to keep the insurance in force, it will lead to closure of bank account and it will lead to termination of the policy. Next question. What is the age eligibility for the Pradhan Mantri Suraksha Bima Yojana? Suraksha Bima Yojana is an accident insurance scheme. It provides for the accidental death as well as disability cover on account of an accident. So what is the age limit here? 18 to 50 years, 18 to 70 years, any age as long as the individual has a bank account or above 70 years. So here in the Pradhan Mantri Suraksha Bima Yojana, all individual bank account holders in the age group of 18 to 70 years in the participating banks will be eligible or entitled to join. Plus, in the case of multiple bank accounts, they can join from one account only. The other account will be closed if they have subscribed from two. Here also there's the auto debit facility. Insufficiency of funds will lead to termination of the cover. Next, what are the key features of the demat account? Now, when we are talking about the dematerialization, so securities that are held in the physical format can be dematerialized into the electronic form through the depositories. We have two depositories. We have the NSDL and the CDSL, the National Securities Depository Limited and the Central Depository Services Limited. So, transacting securities in the book entry form. What is the role of banks here? Banks act as a depository participant. They hold the demat account. So what are the features? It allows holding securities in physical form. Securities are fungible. It requires a minimum balance of securities. The account can be frozen for a desired time period. So the securities are held in not a physical form but the electronic form. So first statement is incorrect. Securities in the account are fungible, yes, and it does not require any minimum balance. So the correct answer is D, 2 and 4. So services, opening a demat account, dematerialization, rematerialization into the physical form again, maintain records of holdings in the electronic form, settlement of trades, facilitating transfers of securities. These are fungible, they can be transferred. All right. Freezing of demat accounts for debits, credits, or both is also available. Then other features of the account can be that the process of getting the securities in the electronic form or converting back into the physical form, all of this can be done here. Nomination can be made, then immediate transfer of securities is possible, then holding investments in equity, debt instruments in a single account. Even minors accounts can be opened.